Okay, so we're just doing a summary of the trading on Thursday, the 3rd of May 2012. And the stock indexes began Thursday on a mixed to slightly favorable note, with constructive auctions in Europe and improved claims data. Initially 365,000 versus consensus or expectation of 375,000. Continuous 3,276,000 versus 3,300,000. Underpinning to some extent in the wake of the previous day's pause. Choppy trade gave way to selling pressure following a weaker than expected ISM services report. That's 53.5 versus 55.5. Okay, here we can see from forexfactory.com, a really good news service. The unemployment claims for the US dollar came out really well, 365,000, which is lower than the expected 381,000. So a good number. After that, however, the ISM manufacturing at 3 o'clock, half an hour after the market opens, which is 10 o'clock US time, came out at 53.5, which was disappointing and lower than expected. You can see both these numbers are high impact news, both of these numbers, and very important to watch if you're trading the US market. As you can see from the S&P chart of 3rd of May 2012, the market sort of held its opening at the open, and after 3 o'clock, which is this level over here, it's sold off, obviously due to the negative ISM report. As you can see, really important, there was a reversal candle bar at the 10:30 reversal time on the S&P. It then rallied, but the rally wasn't sustained, and for the rest of the day the market sold off. So, bad ISM services report. What are we going to do? We're going to favor our shorts. Also, we're going to make sure that we don't enter the market before 10 o'clock. Very important. Don't enter the market before 10 o'clock. Not a good time. Especially if we're waiting for a news announcement. Very important. News announcements can, whatever good our trade entry is, if we have a bad news announcement, that could have a huge impact on our trade. So we don't want to enter any trades before a major news announcement. Okay, another day of gains for the dollar index, 4 in a row, kept energy and commodities on the defensive. A limited late morning bounce attempt in the S&P and the Dow stalled near the flatline, with participants taking a more cautious approach in front of the jobs data, given the aggressive runoff of last week's low through Tuesday. So the market was waiting for this announcement before doing anything major. You can see the consolidation in the S&P. Like I said, the consolidation in the S&P before the news announcement at 10 o'clock. Okay, so here we go. An early afternoon test and penetration of the morning low, Wednesday's low, and the April range top triggered a quick downside extension that looked to be fueled by a wave of program selling, which is computer selling. Some final hours uptick short covering trimmed a minor portion of the slide. The weaker sectors on the percentage base, including gold miners minus 3.5%, healthcare minus 3.9%, semi-equipment minus 3.2%, crude oil minus 2.6%, semi holders minus 2.2%, solar minus 2.1%, networking minus 1.9%, oil services minus 1.9%, mining minus 1.9%, disk drives minus 1.6%, Energy minus 1.6, housing minus 1.6, silver minus 1.6, coal minus 1.6, internet minus 1.6, casinos minus 1.4, biotech minus 1.4, education, cocoa minus 21%, so just a specific stock. A couple of days of consolidation in the wake of a 4% rally off last week's low, and in front of the jobs data leaves S&P just above the 50% retracement of the run. Buy self-inflicts no chart damage. Resistances of interest are at 1394, 1396 and the 1402 area, 1403 area. Initial support is at the 1387, includes a 50 period simple moving average, and the 1380 zone includes the 50 exponential moving average. Okay, so we're just looking back at the S&P on a daily chart, and I'm going to draw the fib retracement from last week's low here to the high of Monday, Tuesday. So here we have, let's just take this off and let's just increase this. Okay, so like I said, the consolidation before the employment data, and just above the 50% retracement of a fib line from last week's low to the high. Let's just make that more. Okay, so the 50% just above. So good area for long, or if it breaks this area, we could be looking at shorts all the way down to the support of 1358. They mention in this report here, resistance areas are at 1394 and 1402. That's 1398, this area, and 1402, this resistance area over here. And they also mention in this report initial support at 1387 and 1380. Okay, initial support at 1387 and 1380. So 1387, which is the 50%, and 1380, which is the 61.8% fib retracement line. So those are the two supports. If the first one breaks, we're looking at the next support 1380. If this one breaks, the next support will be this previous low at 1358. Okay, I just want to run through some trades from yesterday, and I specifically want to do some summarizing of how trades reverse at certain times during the day. So we'll see over here with this stock MJM, gap down at the morning, consolidated before the news at 10 a.m, sold off into the news, and promptly reversed at 10:30, and again reversed back down at 11. So we can see that these times are quite important when it comes to reversals. Again, another example of reversals at specific times. A reversal time at 9:55, just before 10 o'clock. And another reversal time at just before 11 o'clock, 10:55. Another example of a reversal at 10:30, NYX on the 3rd of May. And another example of a reversal at 10:30 on the 3rd of May as well. MetLife, massive sell-off in the morning and reversal candle bar, and a rally up until the lunchtime hour. As you can see, Apple was also an example of a sell-off in the morning and a reversal at 10:30, a small rally, and again a reversal at 11 for a sell-off for the rest of the day. So some of these examples show us that reversals happen at certain times during the day. And it's important to understand that, because if you're in a stock during that time, it's very good to be aware, okay, at 10:30 it's possible reversal time for this stock or any stocks. Let me just be very aware and not be entering any trades at 10:30, or not entering any trades just before 10:30, and see if any of these charts reverse. If they reverse, you can get out of them quickly, take your profit or minimize your loss by setting your stop to break even. After 10:30, you know the reversal time has passed. It's a safer time to actually enter trades. So a couple of reversal times: 9:55 a.m. okay, and 10:30. So what is our strategy and our rules? Say, be careful entering trades around these reversal times. Therefore, before we enter a trade, we check the time. If the time says 10:25, we're not going to enter. Wait until 10:35 to confirm, so that we don't get caught and end up with a loss. Great, very, 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 very important. Something every day trader, opening range trader, breakout trader should have on their radar. Very, very, very important.